CEOs are resigning at paces only seen before some of the most major financial crashes that have occurred in our country thus far. And we're not saying this to scare you, we're just presenting evidence, and we're going to have a whole discussion about it because there's a lot of takeaways you can get from this, and honestly, probably prepare yourself for something major coming in the future. So definitely tune in, but we got some source for y'all.
Yeah, and everything we share will be in the description below, so you guys can follow along. But let's just get right into it, right? So Rel and I were talking about what should we make this episode on, what's really going on. So when we're doing our research, we decided to be like, yo, hold on for a sec. Like, something looks kind of fishy. Let's just go back in history and examine everything. And everything we're saying, there's no confirmation. There's no like, oh, this is going to happen. This is purely based on research. We want you all to know that. And it's not a conspiracy, like crazy theory, or it might be, I don't know. But let's just dive in, right? So in 2008, we all know what happened. So this is the interesting part though. So it says right here, according to new data, 1,484 CEOs were headed out in 2008. We get it, right? Like, that was because there was a lot of crashes happening. And for those who don't know, in 2008, if you look at it, the market, S&P 500, that's what we're using, went down 37%. This includes with dividends. So numbers could vary, but give or take a percent, basically, is fair enough. So obviously, well, it's like, if you're a CEO, you would head out because there's a lot of stress, correct?
Exactly. You're trying to get out the way.
And usually, is it fair to say that as CEOs of these major companies, you have quite amount of power and knowledge as to what's going on in the world?
They find out things before we find out things.
Right? Is that fair? Okay, cool. Hopefully y'all are following along. If you are, also, make sure you like this video right now because we did a lot of research. So it really helps out, and subscribe to the channel. But let's continue. Then we move on to 2019. Mind you, the year right before the world was literally never the same again. Like, we will never look at the world the same after 2020. So 2019, it says it had the most CEO departures on record with more than 1,600. If you remember, I just said 1,400 left in 2008, but we see 1,600 left in 2019, which was right before 2020. But look at this. It was higher than 2008. So it was like, this article came out on January 8th, 2020. So it's like, hold on. Once again, it's like, yo, CEOs are leaving. What happened in 2020? I'm not saying the new code was going to happen. I don't know. I'm not trying to go crazy. But you see this year of 18%. That is the most, like, this is why stats lie. Because give us a lesson on, like, why this number is not really, like, a good representation of what happened that year.
Yeah, because if y'all remember, guys, we actually did enter a bear market. It was just super short-lived because a bear market is when you go down 20% or more from your recent highs. And in 2020, it's when that COVID thing hit us. You guys might remember the market absolutely crashed. It just only crashed for a few months. And
it was like, I think it was like 6 weeks.
Exactly. Like,
it was
6
very
months.
short. It was like very, very short.
Super short-lived, but it was aggressive, like a crazy crash. And then out of nowhere, things just shot all the way up. And the second half of 2020, and then 2021 was just an insane rally in stocks. And as you can see with the numbers there, it was up almost 29% in 2021. You know, so typically crashes are followed by really strong rallies. But at the end of the day, like Newski is saying, 2019, all these CEOs were leaving, and then it led into one of the most aggressive crashes we had, even though it was short-lived.
And think about this, right? Like, so now we're getting into the mindset, and this is how we want you to frame it. It's like, bro, when you think about it, so 2008, we saw people leaving, there was a crash. And then the economy in the world did shift after 2008. Like, new rules and regulations were impacted, which impacted the financial markets. Like, the SEC came out with new regulations. So once again, not only was there a crash, but new rules came out and regulations came out, which actually the banks had to end up following. Same thing happened in 2020. Like, the world was never the same, and new regulations came out, and there was like a crash. And then it says, why have more than 1,300 CEOs left their post in the past year? This came out in 2019, like right before. And then if you guys don't believe us, Just look at this. This will be in the description below. Look at these CEOs. 37 of the biggest CEOs, like Boeing left. Then you see Away left. Like people from McDonald's, United Airlines, Alphabet, like Google. Like people, Alphabet's Google, or Google's Alphabet. Larry Page left. You see all the way, Wells Fargo, all of these people. I keep on scrolling. They all decided to just take us, like, yo, I'm leaving. Even Disney's CEO left. Not in 2019, he left in 2020, right before March. He left in February, and we all know COVID was in March. So it's like, what's going on, bro?
That's suspect. And these not even no like small level or low level CEOs. These are some of the biggest companies in the country.
Bro,
and
eBay.
These people, eBay, especially at the time, Nike, but Mark Parker. And so it's like, okay, they know things we obviously don't know. These are literally the biggest companies in the country. So if everybody's stepping down collectively, are you gonna really call it a coincidence? I don't know. That's up to y'all.
And now look at this. We don't have the whole link to this because we're not subscribed to Bloomberg right now. But April 2019, 2023, look at what this article says. CEO departures hit the highest level on record. And then you look at it, CEOs, this came out in 2023, October 20th, even CEOs are joining the Great Resignation. Go
back to the other one. I think you said April, did you say?
No. Okay, October 19th, 2023. This is when it came out. It was updated on October 20th. This is the same exact thing, October 20th, 2023. And it says CEOs are leaving. But guess what? CEOs are quitting at a rate this year, which is in just the first 9 months, we've seen 1,400 again in just the first 9 months. So if you notice, 1,400 before, 1,600, and now 1,400. Every time we hit 1,400, look what happens. And we're not making up our own metric. I promise you this is just us thinking. But it's like, yo, when you think about it, all these people are leaving. This is just the first 9 months. It says in the first 9 months, this is up 49%, bro, from the CEOs who exited last year. And if you think about it, last year was 2022 when the market was down. And now what scares us even more is, yo, we fixed it, right? Things are getting better. But wait, bro, didn't we just make an episode about what's going on in the world?
Yeah, it's a lot going on in the world. And quite honestly, bro, a lot of people think that Q1 2024 is going to get scary in the market. A lot of people think that we're going to go through a recession the next year. So
shout out to Brian Windhorse right here. It's like, now, why would they be doing this, right? It's like, why are the CEOs coming together? Why are they doing this? Because a possibility could be this, right? Like, there's so much uncertainty what's happening around the world that it's like we don't know what's going to happen. So we want to kind of pack our bags, take our bonuses, and leave. And now Jamie Dimon, who's the CEO of obviously JP Morgan, Larry Fink, who's the CEO of BlackRock, when these people speak, people tend to listen. It's like they're talking about the Middle East crisis. Now, we're not going to comment like too much into stuff with Palestine and Israel, but at the end of the day, what's going on there is very concerning. It basically, this whole thing, I don't want to get too much into it, but essentially it's saying that because of the geopolitical risk on what could happen, it can create a recession in the European market, and it could also create a recession in the US market, because when people have the geopolitical risk, they don't spend as much, and then consumption goes down as well, which is obviously going to impact the market. Now, with all that being said, this is Larry Fink, the CEO of BlackRock, who runs the entire world, and then JP Morgan's CEO, which is Jamie Dimon, who also runs the world, who's literally saying it's quite scary and unpredictable. So that's kind of what we want to share on this. Orel, what's your take?
Yeah, I mean, it's like, so, okay, you have all the geopolitical risk at hand. They spoke heavily on that. But then you also can say that the rate hikes that we've seen, we haven't really fully seen the effects of them. Even up to recently, you saw even some regional banks were failing again or having issues again. And it wasn't just stopping there. It was also in the commercial side of banks too, where you have some bigger banks were feeling some heat too. So like the rate hikes that we've seen, they're not really, it hasn't really worked its way through the economy yet. And I know everybody was kind of anticipating that 2023 would be the year where we see, this big old recession. Even we thought that heading into this year, everyone did, but this year panned out in a way that no one predicted. But now they're saying, all right, well, we saw even more rate hikes come out in 2023. So now this time, 2024 should be the one. And at the end of the day, if the CEOs are starting to step down at alarming rates, maybe they agree as well. Elon Musk even talked about in his recent earnings report the pressures that the economic environment has placed on his company. And this is Elon Musk with Tesla. And so it's like if the big ones on top are feeling heat, what do you think even like smaller companies are feeling? And so everybody's kind of getting out the way, and Q1 is already projected to be a time where the recession might start to hit us. And I know everybody's been singing this recession song for a year now, but sometimes things take time, and COVID was an unprecedented time, and we took measures on monetary policy that no one really expected. We never had to do that before. COVID was something that no one planned for, and so it might take longer to work its way through the economy, but that pain has to come someday. I ain't gonna lie, and maybe that's 2024.
Yeah, and we don't know, but the people who do know would be the people on the top, from what Rel just said, Paul. So it's kind of like that's kind of crazy, but it's kind of like the people at the highest level know what's going on because they have the most power, because they make the most money. So exactly. That's kind of what we were trying to get at here. Once again, completely our opinions. Like Rel and I are not making our own metric up, but this is just what we think could possibly happen. Now, the best way to avoid this goes back to what Rel and I always say: invest in the best companies, invest in ETFs that make sense, like the S&P 500, or just trail the total market in general if you feel more comfortable doing that. But this is not the time to be taking risk and going YOLO mode, right? So let's just see what happens. If you guys think this is kind of cool, comment below. We want to know, like, literally share this, comment your thoughts, and engage with us as much as possible. Please make sure you like this video and subscribe to the channel. Plus, if you want to hear from us all the time and know what's happening, click that little notification bell, because we drop
2 videos a week.
You do not want to miss them. Check us out on Wednesday, but until then, peace.
Peace.